Good morning, good evening, good night. Wherever you're watching this transmission, it is I, Mike Martins. Welcome to another. Let's discuss a little bit of the auto sector. And auto sector is not looking well right now. Auto sector hasn't been looking well for a long time now. Consumer confidence is down. People are stretched out in debt. People are maxed out. People are at a point right now where they're at. Everyone's at a breaking point. And I just did a story yesterday about how an average two-bedroom apartment in Vancouver is going for about $3,043. So we for a one-bedroom, you need to make about $7,000 a month just to afford a one-bedroom, provided you have no expenses, right? I mean, that's how bad it's getting right now. I don't know how many companies are handing out that much money. A lot of people are saying, well, the tech firms are paying that. No, they're not. I know tech guys, tech workers in the, that went to Vancouver gaming school, like the Vancouver Film School and Vancouver video game, like software design and development. They're all living together, like 3-4 to a house, 5-6 to a house. They can't afford to get their own place. Right, so when you look at one of the highest demand working areas, high paying areas that people have to live together, what's going on, people? Anyways, next domino to fall. Inventory glut plagues U.S. auto sector. New prices plunge in July. China, Europe, India, some of the world's largest industrial hubs for automobile manufacturing have shuttered factories, laid off workers, and reduced the average workweek hours, all due to the industrial slowdown that originated in the Eastern Hemisphere in late 2017-2018. The industrial downturn has spread from east to west, infecting the U.S. economy. So here are your recession bars right here. And here you go. Look at that. Wow. Look at that recession. Look at the auto sector. Now, auto sector, is it set for another dive? Is it set for another decline? Well, with consumer confidence going nowhere but down, let's keep reading. So far, U.S. auto manufacturers have weathered the synchronized slowdown, but in the new report, Reuters headwinds for the industry are starting to mount the 2H19. So second half of 2019, basically. That's what they're trying to tell you. Federal Reserve data shows auto vehicle parts production was up 3.7% in 3 months for May. So you know what that means? That means people are fixing their old cars. They're not buying new cars. To July year over year, this is far better than the rest of the manufacturing was down 0.3% May to July year over year, which was fastest rate of change to the downside since September to November 2016. So guys, this is an indicator right here. They're just drawing it out here, giving you that's the last recession. This is when the quantitative easing started going out, and the printing presses went full blast, and they lowered historic rates to historic levels, basically giving money away to PayPal. Okay, so what's going on here now? Reuters noted growth rates in the auto industry started to come under pressure in the second half of 2018 and first quarter of 2019, but output, employment, and sales ticked higher by the end of April thanks to lower interest rates and springtime buying. So springtime is the time to buy for pretty much housing and in the automotive industry, right? Dealerships for the last several years have been able to boost vehicle prices to levels that could soon be considered resistance among customers. New vehicle prices climbed 1% from March to May year over year, the fastest year over year increase from September to November 2013. But it seems prices have hit the barrier in mid to late September, outpacing wages as consumers starts to pull back. It's consumer confidence, guys. No one's confiding in vehicles anymore. Why? Because you're seeing a lot of the major cities, guys, what the major cities are doing, and it's kind of clever what they're doing, to be honest with you. They're upping their transit systems and making them better, more reliable, cleaner, organized in some cities. I'm not saying all, to make people dependent on transit, government transit. You go where we say. You know what I'm saying? No freedom of the highway, no freedom of the road, no more road trips to explore. But it seems to have hit a barrier in mid-late summer, outpacing wages as the consumer starts to pull back. The University of Michigan's monthly survey consumers found that the number of people saying it's a bad time to buy a new car because prices are high and been increasing this summer. Vehicle sales have since stalled in 3 months, May to June, year over year, according to the U.S. Bureau of Economic Analysis. An auto glut is starting to form with the dealership inventories of 1.77 months of sales in June, up 1.55 months in the same time a month a year ago. So there it is here. So look at this right here. We are pretty much at this, the 2018 there. It's getting to that point right there. And I think because of consumer pullbacks, we're going to start to see a decline on the automotive sales. I mean, there's no question about it. There's no doubt about it. So, yeah, if you guys want to hedge or you want to hedge against or you want to short automotive companies, I think that might be a good idea. Do your research, guys. Please do your research. This has resulted in dealerships holding older model years and restoring to more price discounts to clear access. The inventory glut reflects the continued cooling in the U.S. auto market, according to Wall Street Journal. Dealers dangle deals to move outgoing models. WSJ, August 2016. Sales remain relatively healthy, but automakers haven't adjusted their production schedules quickly enough to account for the slowing demand, leading to a backup of outgoing model year vehicles. Reuters said new vehicle prices and discounts plunged in July as dealers were attempting to clear inventory because the glut. Manufacturers could now slow production in the coming quarters, restoring in the loss of hours worked, layoffs, and or shuttered factories. If growth in the auto manufacturing slows or turns negative, it will have a knock-on effect throughout the supply chain and employment, said Reuters senior commodity analyst John Kemp. The auto industry accounts for about 3 to 3.5% of all overall U.S. GDP, is a major contributor to all 50 states' economies, and employs millions of jobs. In the next domino to fall, the auto industry, this would be the bad news for the Trump economy heading into 2020 election year. This is definitely bad news because you can't hide these numbers. And now with the construction industry slowing down in the other English-speaking countries, we already seen the auto industry slow down in Canada and Australia and other countries like that. So it ain't looking good on the forefront, guys. It ain't looking good. So let's take a look here. U.S. auto sector outlook is softening, says Kemp. So here it is in London. U.S. motor manufacturing has been a rare bright spot amid the worldwide slowdown in the auto sector and a cooling in the rest of the United States industry. But there are signs of U.S. automakers could now be running into headwinds as well. Slowdown dogs auto sector. Overall retail sales down 6%. So this is in New Delhi. They're saying it's a year-over-year basis. Sales declined to 2 million. Why do they have a comma in front of the first? Okay, so I don't know how they do this. They have a 2, then they don't have 3 numbers. It's not 2 million. It's 243,000. But why did they put a comma in front of 2 numbers? Let me know if you're from India why they do that. And July, so they're down. Units are down in India, in New Delhi is reporting huge slowdowns. And layoff grips auto sector as sales continue to dip. So it's going to be, huge. The Indian industry is witnessing massive layoffs as the industry is witnessing constant dip in the auto sector in the current financial year. So you're seeing it hit the bigger economies, and you're going to start seeing it spread out. And the countries that didn't depend on auto sectors to build their economy depended more on housing sectors to build their economies. So the construction boom is down. So it's a hit and miss overall. Yeah. Anyways, guys, let me know what you guys think. If you want to support this transmission, go ahead and donate $1 a month to me through Patreon. I am on Patreon, folks. Help me out. $1 a month to help with this transmission. And help with my coffee addiction. It's what it's for. It's buying me coffee is what you're doing. And I'm also on a couple other sites there. Check up on the top of my channel and let me know what you guys think in the comments below. Don't forget to come on live to Mike in the Nights, 9 p.m. Western Seaboard time, LA County time. I'm live. If you guys want to come live on the show, please come on live. Let me know what you have to say or what's on your mind on Mike in the Night. Thanks for watching, and don't forget to hit the subscribe button, and if you want to share a video, go ahead and share one of these videos, get it out there. Thanks for watching.